Hello, welcome everyone to our webinar today. We're just going to give it 30 seconds or so to let everybody join, and then we will get going. Hello, thank you for joining us today. We're just letting everyone in and we will be kicking off very shortly. Okay. Welcome everybody to our webinar today, our autumn statement special, what's going on with R&D tax relief now and in the future. Your hosts for today are Jen Badger and Mike Dean, and we'll be running today in a relaxed fireside chat style format. We do have time set aside at the end for a Q&A, but both Jen and Mike will be happy to take questions as we go through the session, so please don't be shy. We are aware that the audience today is quite a mixture of our current customers and some of you who may not already know us. So if this is your first interaction with us, we are WhisperClaims, an R&D tax software company with a difference. Through a combination of our advice line support and our app, we help UK accountants to confidently navigate the complexities behind HMRC's R&D tax scheme in a way that is clear and comprehensible. We're not consultants, we don't work with SMEs directly. We exist purely to support our customers to deliver R&D tax services to their clients. So for the agenda today, Jen and Mike will be reflecting back on the changes that have come into force in the last year or so, reviewing the recently published GFC3, that's HMRC's new guidance to help claimants determine if they're doing qualifying work and how to avoid common mistakes, then to the April 2024 changes and what they mean for advisors and claimants, and finally to our Q&A. Just a tiny bit of housekeeping before we get going. I will be using the chat box to share a variety of resources as we go through the session. So if you do have any questions for us, please can you use the Q&A box in the ribbon in the middle at the bottom of your Zoom screen. If for whatever reason a question goes in the chat box, it's not a problem. We will make sure we try and get to it. And if there's anything that we can't get to within the session, we'll do our best to respond following today. So everything that we're sharing today will be sent out, a live recording, and also all the resources tomorrow in a follow-up. So if you don't get a chance to download things today, then don't worry, you'll get that later on. Over to you, Jen and Mike.
Brilliant, thank you, Suze. So, Jen, it's probably safe to say the last 12 months or so have been we've been faced with a huge amount of change. So what we thought we'd do to sort of kick this session off is just kind of recap on everything that's happened in that period before we even get on to what came out of the autumn statement last week.
Yeah.
So what's been happening so far?
Yeah, so obviously everything that's happened in the autumn statement needs to be looked at in the context of everything that's happened over the last year. It's been the biggest year for change in R&D tax, I think, since the scheme was launched in 2000. So there's been a huge amount going on. I've tried to separate everything into when they came in, when they were implemented. So the first lot of changes that actually came in on the 1st of April this year, and that was the changes in enhancement rates was the biggest change. So that was where the SME enhancement rate was decreased to 86%, and the RDEC credit rate was increased from 13% to 20%. And then the SME tax credit rate was reduced from 14.5% to 10%. So this had a massive effect on the amount that claimants can receive in tax benefits for everything that they spend after the 1st of April. So there aren't a huge number of claims that have gone through yet using these new rates. They're starting to wash through now, these kind of lower rates, but that has massively impacted the level of tax benefits. So it's gone down from the maximum anyone could get was around 33%. It's gone way down to more like an average of about 18% now. So the average before was 25, the average now is around 18.
It's probably fair to say, just to cut across you, it's probably fair to say that those changes to the rates resulted in a bunch of people pulling out of the market earlier on in the year, particularly people who are focused at the small end of the market.
Yeah.
Claims. it might have also been exposed to, perhaps what we'll talk about in a minute, changes in HMRC behaviour at the same time. But that squeeze has meant a squeeze on profitability for certain providers out there in the market.
Yeah. It's definitely harder for providers to support SMEs now, just because if they're taking any, especially contingent fees and fixed fees, it's getting really difficult to justify your fee almost relative to the benefit that the claimants are getting. The other thing that was a very last minute scheme introduced by the government it was first announced actually at the spring budget at the end of March, was this R&D intensive SME. So this was in response to their proposed reduction in rates that was announced in the autumn. Obviously, there was a huge outcry about smaller, very R&D intensive SMEs massively losing the benefit they got. So they introduced this concept of an R&D intensive SME. So these are SMEs that spend 40% of their overall spending on R&D. They can continue to claim, if they're loss making, the 14.5% rate. So we will talk in a lot more detail about the R&D intensive concept, but all of that hit 1st of April. The R&D intensive especially was very last minute and actually couldn't be used until the summer, until the legislation came out. Alongside that, I've put in the R&D intensive twice. There you go. The claim periods starting on or after the 1st of April. There were new categories of costs and a new area of science that could be claimed. So pure maths was allowed, and data licenses and cloud computing services costs. So this is only for claims that started on or after the 1st of April. So we haven't seen many claims go through yet with these costs or in that area of science. And pre-notification came in. So this is something that we knew was coming. Again, it hasn't hit many claims yet because of that claim period starting on or after 1st of April. But this is where companies that haven't claimed before, haven't claimed in the last 3 years, have to tell HMRC they're planning to claim R&D tax relief. So we're starting to see that coming through. Shorter claim periods are now having to notify HMRC. Come April, there'll be a huge number more. All the claims that the accounting periods that end 31st of March potentially would fall into that notification thing. What we're seeing is an impact of that actually is quite a lot of software systems aren't keeping up with this and are throwing errors when people try to submit claims at the moment. HMRC have actually pushed a few claims back, we've heard, because they didn't have pre-notification even though they didn't need it. So there's definitely bugs in the pre-notification so far. But, and this is maybe from a personal point of view, the biggest thing that happened this year and the biggest impact for us as a company, myself personally, because we had to spend all summer doing this, was the introduction of the additional information form. And this was actually brought forward. So when this was first announced last autumn, this was going to be, again, for claim periods starting on or after 1st of April. And this was brought forward to any claim submitted after the 8th of August. So this is now a requirement. All claims have to do this, no matter what the start or end date of the claim is. So this is HMRC for the first time mandating a certain amount of supporting information for a claim. So this means there's a minimum number of project descriptions need to be included, detailed cost breakdowns, and this is something that has to be submitted before the CT600. So as I say, this was brought forward. It was done in what felt like a bit of a rush. So HMRC did announce that in August, 50% of claims didn't have an AIF and were therefore rejected. So not many people knew about it when it first hit. I think that's getting better. The most recent thing we've seen published is that 15% of claims are now being rejected on the basis they don't have an AIF. And again, there's been a lot of teething issues, as we've seen, Mike, with clients saying that they submitted an AIF, but were told they hadn't, or had submitted in the last few days of July, and were told they should have had one when they didn't need to because it was before the date that it was implemented. So it's been a tumultuous year, I think, is a fair summary.
Although it is interesting, I know when we looked at our stats a week or two ago, that we'd had something like 120, it'll be a good few more now, but 120 claims go through the app since 8th of August. And so, you know, in proportion, we've not seen that many people with those kinds of issues when you kind of take it in context. It's one of those things, isn't it? There's that kind of LinkedIn, negative LinkedIn bubble where you get to hear about all the bad stuff. But in reality, the majority of claims that are going through seem to be, you're not coming across those.
I think the biggest impact is when people didn't know about the additional information form and have something that's very close to deadline. So we have seen some claims lost because they didn't submit an AIF, it was rejected by HMRC, and they'd run out of time to resubmit. Obviously that will wash through It's gone from 50% of people not realizing it's needed done to 15. So it's going down very quickly, the number of big issues with it. It's more around accounting software systems keeping up. And I absolutely have huge sympathy with these systems having had to do all the work to get our app fit for purpose for the AIF. I can see why there's still teething issues here and there.
Yeah, that's something we can be really proud of, and you and the dev team particularly, is that the fact that we did get it out for the 8th of August, which was an achievement at the time. So just talking about the AIF, we've got an ebook that's specifically focused on the AIF. So anyone who's on the call, most of our customers have probably already downloaded this, but anyone who's on the call and hasn't seen this and wants a real insight into what the AIF is all about, and actually making the distinction between that and the other form, the pre-notification form that was announced at the same time way back when, do feel free to download that. Hopefully Susan's put up a link to that in the chat box just now. So I guess only a couple of weeks before the autumn statement, maybe not even that, HMRC released some new guidelines for compliance, which is quite interesting in terms of their timing. So what was that all about, Jen?
So this is part of a program that HMRC have been doing for a while. So they're producing these guidelines for compliance for different areas of tax. I guess there are areas where they see errors more often, and they're trying to give people more help. So it's a very kind of helpful, supportive document around, here is what we expect of you, here's what we expect to see, and here's how to essentially protect yourself from an inquiry. So if you follow all these steps, you're less likely to get any attention from HMRC. So the Guidelines for Compliance 3, GFC 3, was released at the end of October, and this focuses entirely on R&D tax. So it's got, sorry, to take a wee step back, this is what this feels like, is this is the result of the last year and a half really of increased HMRC inquiries and increased HMRC attention on R&D tax claims. So they've done this, they've looked at the ways in which people make mistakes. So this is entirely about the kind of error side of the issues with R&D tax relief. They've looked at the things that people do wrong, they've looked at the ways in which they're producing claims that are less than perfect, and they've tried to help. So it is, as I say, the tone is very supportive, it's very helpful, and it is about helping people not get inquiries. So it's in 4 parts. So the first one is expectations for claimants, which I think is really good. There's nothing in published guidance anywhere. There's expectations on HMRC and how they would assess a claim, but there's actually never been anything published about what is expected of you as someone that's claiming or someone that's advising someone who's claiming. So this has got a 13-stage process for assessing claims. Now, anyone that's been working in this area for any length of time will have a process that's very similar. So this is about getting the competent professional to talk through the projects and identify what the advance was, what the uncertainties were, all of that kind of stuff. So it's covering all those main criteria. The main thing that this is doing, and it builds on it later in this document, is emphasizing a competent professional has to be involved in the process. So it's emphasizing that even if you bring in an outside advisor, they are not the competent professional. The person that led the project is, and so it's making sure that that balance between the claimant company and any advisor is maybe shifted more onto the competent professional. So the second section is the importance of competent professional. So this again goes into a lot more detail about who would be considered a competent professional, what the actual definition is. So in the original guidance in the CIRD, it said something like, we won't define a competent professional because we think it's fairly easy to work it out. I'm paraphrasing, but that was essentially their attitude. That was then expanded a wee bit, but there's always been questions around, what do you mean? How much experience in an area is enough experience to be considered competent? All that kind of thing. So this gives you some good guidance about who would be considered and some really good examples. And that's a big help, is a kind of illustrative examples, which is something we've never had before. And it's got instructions on, if you get to an inquiry stage and you're asked for a competent professional's opinion, here are the things we'd expect them to be able to express and what we want from them. So again, it's really helpful, really kind of, it's all addressed at the claimant company, but really helpful for both claimants and advisors. Third section is on actually identifying qualifying expenditure. And this one is the closest to actually the CIRD and other guidance we've had. So this is purely going through, this is what an advance is, this is an uncertainty, this is what a resolution would look like. But what it does have is more examples, more detailed examples than we've maybe had in the past from HMRC. I will say some of them surprised me. There's examples from food companies, which we've always pushed back. No, I'm obviously large industrial food production, there's R&D there, but it's always been felt that HMRC didn't like those claims, I suppose, and they're using those as examples. So some of the examples, I think anyone that's been through recent inquiries might be surprised at what they've used as an example. But yeah, that one shouldn't be a surprise to anyone at all. We've had all that information before, it's just got better examples. And then the last section, which again is something that's actually quite new, we've never had such kind of prescriptive advice from HMRC, is around record keeping. So this is actually really direct advice from HMRC on what record keeping you should do. It covers both the ideal situation where you know you're going to do R&D, and here are the notes you should keep throughout the project. So once you've identified an uncertainty, write that down. Write down what the uncertainty is and how you're resolving it. But it does also talk about, as is more common than I think than anything else, when you finish a project and realize that it would be eligible for R&D tax relief, it's how to manage that. So it's how to record the projects for an R&D claim, but it's also giving some good advice on, you know, if you do this, then defending it will be much easier. So if they ever come with these questions, here's the information they're going to be looking for, and here's how you could express it best. So it's all based around both making sure the quality of claims going to HMRC is better, and also that inquiries are easier to defend, that people know what's expected of them in that inquiry and can respond appropriately.
I must admit, reading through these guidelines, two things struck me. One is something you've already said. There's not many surprises in here. You know, that actually, if you've been doing this for a long time, you'll read this and think, well, yes, of course, that's the way that this is done. But on the other hand, the thing that did surprise me about it was the tone, given that, you know, the tone from HMRC, the nature of communications and the nature of some of the feedback that the market's been giving over the last few months has been really negative. But like you say, this has got a really helpful tone of it. It's almost like there's a line being crossed, that now we're moving into a phase of actually let's help people to do this better. And
there are some, you could criticize some of this. For example, there's a section about if we open an inquiry, here's what we might ask for. And they talk about doing site visits, having phone calls, looking at prototypes. And HMRC have been incredibly reluctant to do any of those things in inquiries over the last year. It's been very much, no, this is desk-based and we can do it efficiently as a desk-based thing. We don't need to speak to you. We don't ever need to see anything you've done. So hopefully that this signals a move back to that kind of more collaborative, cooperative approach to inquiries, where it's, no, come show us what you've done. We're sure you've done something good, and therefore here's we'd like to come and see it and understand it. You've maybe just not expressed it very well in your claim. Yeah. Here's hoping.
Well, yeah. Well, and I mean, the other thing that's kind of gone on in parallel with that is the implementation of the AIF, and now they've got that as a filter mechanism at the front end. Maybe that's the kind of trigger to shift into this more helpful approach. But time will tell, won't it?
Yeah. And what's quite interesting is we've seen stuff come out recently around some things they're doing, which we don't need to go into, but what the next set of nudge letters coming out from HMRC will be. And they're going to be looking at sectors where they wouldn't expect to see R&D, and they're going to look at claims where they don't think there's an advance. And it's only the AIF that's made that second one possible, because now everyone has to describe their advance. It allows them to target those that they don't feel there's a legitimate advance in science and technology. Yeah. So at least they can get more and more focused in these nudge letters. So going after sectors and going after particular aspects of a claim.
Yeah, but even the like you said before about food examples in the guidelines being surprising. Even in that statement that they've put out around sectors, the sectors surprised me. So they've mentioned hairdressers, beauticians, I think gyms or fitness centres, something like that. They kind of makes you realise, well, if that's the level of stuff that they're worried about, people are still putting in claims that fall into those categories. It shows you what it is that they're trying to actually deal with. Here.
Absolutely. And I guess it's trying to get rid of all that noise so that they can have a steady flow of legitimate claims going through, and they're not having to worry about 50 care homes managing to get money out of HMRC that they're not entitled to.
Yeah, absolutely. Cool. Well, that's an appropriate time to mention another ebook. So we've got another ebook that focuses on writing a technical narrative. So given that the AIF now mandates technical descriptions for all of your appropriate projects, this is a good one to focus in on. So again, anyone who hasn't already downloaded this, it's a useful resource. So again, the links to that will be in the chat box. Cool. So autumn statement then, bringing us more up to date. So this all hit us last week. I know in our case we were waiting with trepidation for this to hit, and there's all sorts of news in there. So what are the key things, Jen?
So the key thing is, so to again take a small step back, this is something that was first consulted on by the government in HMRC this time last year, around whether we should have a merged scheme to try and reduce the complexity of having both the SME and the RDEC schemes. There was then draft legislation came out over the summer, which I think got some very robust feedback, and it's nice to see that some of that has been taken on board. But what essentially came out in the autumn statement is that yes, they're going to scrap the SME and RDEC schemes and have one merged scheme, sort of. We'll talk about the R&D intensive scheme in a minute, but for the vast majority of claimants, there will be one scheme. So no more having to work out whether you qualify as an SME, whether you have to claim it as a large company, all that kind of thing. It takes away some of that complexity, and obviously it takes away, the complexity around there being different rules for different companies at different times and transition periods and a lot of kind of stuff that goes around this. So the merged R&D scheme will apply to claim periods starting on or after the 1st of April 2024. So this was the biggest change from the draft legislation, the one that we were really, really worried about, because the draft legislation had this starting for expenditure incurred after 1st of April, which would have been a mess, and it didn't give anyone any time to make any adjustments, get used to it, work out what they were actually doing. So wonderfully, it's not starting until for claim period starting on after 1st April 2024. So we won't really see claims under this new regime starting to wash through until this time next year. So the idea of this is it will be an above the line expenditure credit of 20% given in the same way as the current RDEC. So you work out your eligible expenditure, you take 20% of that, and then tax is paid on that because it's an above the line credit. It's
so
going
that black art that has always been sort of put out there, particularly by some of the consultancy firms, of what's the benefit going to be. That problem will go away, won't it? Much clearer to claim.
And that for given the stated aims of the R&D tax relief scheme, this aligns much better with that, because what this allows companies to do is know really pretty accurately from quite early on in doing a claim what their likely benefit is likely to be. And it means that if you're planning to spend a certain amount in R&D, you know for sure what your tax benefit is. So it allows planning, it allows people to know that they'll have the funding next year because they'll get their tax relief on this year's spending. So that's a really good thing. And if this whole scheme is around encouraging innovation, then that is an amazing thing to have clarity. Essentially, though, all the rest of the rules will come from the SME scheme. So it will use the current SME, PAYE, NIC cap rules, which is good because they're much more generous than the RDEC cap is. And it's going to allow subcontractor costs for all claimants, including large companies. So that's a big, big change for any large companies claiming through RDEC. Somewhat negative if you're a company that's always claimed as a subcontractor to large companies. You'll no longer be able to claim at all, but it does mean that large company claims will be a lot bigger and be able to include a lot more. It will, however, incorporate the ban on overseas R&D costs. So no more paying overseas developers to build software for you for R&D and being able to claim that back. And the same for EPWs. They'll only be a qualified an allowable expense if they're subject to UK PAYE. But that was all slated to come in. That was actually delayed from April 23 to April 24 anyway. So that was all expected. The big, actually, I think it's a surprise they went with this, is that now grants and subsidies won't make any difference. So grant funded work is allowable. You don't have to reduce it. You're not routing it through different schemes. So that obviously, again, reduces the complexity hugely and encourages, again, companies can take subsidies, can take grants, knowing that their R&D tax relief is still going to come through for them. Other sort of small things to note around the actual then tax benefit. So it is a drop in tax benefit for SMEs. There's no way around that. But at least it's a more reliable tax benefit. You know exactly what you're getting. So for profitable companies paying the full 25% corporation tax, they'll get 15% of their eligible spend back. For loss-making companies or companies with small profits, they will get somewhere between 15 and 16.2. 16.2 is if your company's on the small profits rate of 19%. And HMRC have stated that loss-making companies will be able to use the 19% tax rate on their benefits. So they get a little bit more. So I think overall, in a lot of ways, it represents some simplification. I think there's still a huge number of questions. Every day when I'm thinking about, because obviously from my point of view, I'm thinking about how to adapt our app to make it work for this. Every day I'm thinking about this, I think about more questions, more things that aren't clear. We're hoping that when the legislation comes out, it will cover some of the questions, and there is an R&D consultative forum next month that will hopefully again clarify some of the points that we're looking at.
Yeah, the legislation is probably due in January, isn't it? There's no date published, is there? But
yeah, I mean, I hope it comes out soon, because obviously there's a huge amount of adjustment people are going to make, and just having clarity on, for example, whether contributions to independent research will still be allowed. It's a very niche part of the scheme, but knowing that helps large companies and companies that support large companies like us to be able to make sure we get everything right come April.
Yeah, and it's very, very important for us to know from a development point of view. So fingers crossed on that. So also in the autumn statement, as you mentioned, was a mention of the R&D intensive scheme and a change to that as well. So what was that?
So this is probably where the most questions come in. So what HMRC have stated is that come 1st April 2024, there will be two schemes still. One will be the merge scheme, so the R&D expenditure credit merge scheme, and one will be the R&D intensive SME scheme. So this came in April for loss-making SMEs whose R&D spend is 40% of the total expenditure for the claim period. What they can do is they enhance their expenditure by the 86% that SMEs can currently do, but then they can access the 14.5% rate rather than the 10%. So that takes their overall benefit up to about 27% of their eligible expenditure. So that's been a really good thing to kind of maintain a certain level of tax benefit for essentially what will be small startups, small tech companies who are making a huge loss but doing really cutting edge stuff and spending a huge amount on R&D. So
in terms of the overall volume, if you like, associated with the scheme, though, that was anticipated to be tiny, wasn't it?
Yeah. I'm not sure the exact numbers, but I know that the changes they made said they would bring 5,000 more companies in. So it can't be a huge number. It would be fewer than 5,000 definitely would ever be able to access this. Because it's so niche. It's got to be spending huge amounts and loss making. So those two things together. So this is, again, something that, because it's only for expenditure incurred after the 1st of April 2023, and it couldn't be claimed till the summer because the legislation hadn't come out, we haven't seen many claims going through under this scheme yet, just because the nature of the kind of time periods that we're looking at. So it feels like this hasn't bedded in. People haven't really worked out how it's working yet. And then what's going to happen, and I put 23 there, it should be a 24. So for claim period starting on or after 1st April 24, that expenditure limit is going to be reduced to 30%. And in the budget speech, they said that that would bring 5,000 more companies under this umbrella being able to get more benefit. However, what isn't clear is the kind of mechanisms for this now. If the SME scheme is essentially being scrapped and merged with the RDEC scheme, so we're having one shiny new merged scheme, which of the rules from the SME scheme will be retained to enable this to happen? So will it still be an 86% enhancement? Is that still going to be the way that this is actually realised? So all of that, there's some question. I mean, we can make assumptions. We have to assume it's going to remain very much like the structure of the SME scheme in the way that it's claimed, but that's not been kind of directly stated yet. The one thing they have said is that they're going to make sure that the rules about grant funding and subsidies will apply to this scheme as well. So again, anybody that's got grant funding, it won't make any difference to what they can claim. That would have been really complicated if you then had to have a kind of, if you've had a grant, then the amount of the grant goes through a scheme that doesn't exist, and then you claim, we end up with 4 or 5 different schemes. So that is, again, a good step forward, but there's still a huge number of questions about how this is going to work and how this is going to run alongside. They have said things like, if a company successfully claims through the R&D intensive scheme in 1 year, but then has some extraordinary expenses in the following year that mean that the percentage R&D versus overall spending drops, they can still claim for that second year. Because they have pointed out that if you're a fast growing company spending a lot on R&D, you might need to buy a massive piece of equipment in 1 year that would up your spending, that kind of thing. But yeah, because I suppose the feel, I think, generally is that very few people have actually implemented this yet. Very few people have had to use this. It's hard to know exactly how it's going to work post-April because we haven't really seen how it works now.
Yeah. And I suppose just in general, with all of the changes that you've talked through, many of them are simplifications and the world gets better beyond April. But it is worth remembering, as I say, for our audience on this call, that they could well be handling claims that go back essentially 2 previous years. So we are going to have this kind of layering effect for a little while to come, where this scheme will be in operation, but we'll still be working through claims under the old regime for a period of time.
You could very easily find yourself, if you're doing 2 years worth of claiming for a startup company that spends a lot on R&D, claiming under the old regime on the pre-April 23 spending, the new R&D intensive scheme for the post-April spending, and then for the following year you've got a different rate altogether. So there's going to be a huge amount of flux, a huge amount of short-term complexity, I suppose, of trying to flush out all of this. And as you say, we'll still be supporting, people are still going to be putting claims through under the old rules for until the end of March 2026. So it's a long time for this to wash through and become the norm.
Yeah, I suppose one bit of good news in the sort of associated documentation to the statement last week was the government declaring that they've stopped meddling with the scheme. I forget the actual language now, but it was along the lines of, we've completed our review. So we can at least hope that this is the end of these changes for a little while. It won't be a change necessarily to HMRC's processes and the way that they're managing the scheme, but in terms of changes to legislation, hopefully we've got a period of stability.
Yeah. And I think it's definitely taking all of this together. It feels like, especially with the technical note that was pushed out at the same time as the actual budget last week, it definitely feels like a return to maybe a more pragmatic approach to claims, that they feel like if they can just wash out the claims for, as you say, hairdressers, care homes, gyms, they can go back to a more pragmatic approach to assessing claims and how people do them. So that's reflected in, for example, what seems to be a change in approach to subcontractor costs. Subcontracted R&D and who can claim for it. There's been a lot of to and fro, I'm going to say, over the last 2 or 3 years on that, where prior to that, there was a definite feel in the sector that you could, if you were making a widget for someone and you had to do R&D to deliver that widget, and the person you were delivering it to didn't know the R&D was taking place, then you could absolutely claim as if that were in-house off your own back R&D. That changed with some tribunals that happened a couple of years ago, and HMRC pushed back and said, no, if you're receiving any money for anything, it is subcontracted R&D, and therefore you must claim through RDEC or not at all. And now they've gone back to a more pragmatic, it's the decision maker. So the person that decides to do the R&D from 1st of April 24 that will get to claim for that work. So it's going to be interesting to see what happens now that large companies can claim for their subcontractors, how that affects the people subcontracted to do the work. So there's still quite a lot of, as this settles in, there's going to be a lot of change, I think, in the way people approach R&D. As you and I have talked about, Mike, if you're someone that writes contracts for large companies with their subcontractors, you're going to be having a great time right now making sure that they can claim.
Bumper time coming up for those people, definitely. Cool. So in terms of another change, that again, this was kind of hidden down in the documentation last week. Walk us through this restriction on nominations and assignments.
Yeah, so what some advisors have done up till now, and I'm not going to say that all people that do this have been bad advisors, but it's definitely something that's more prevalent amongst the less ethical providers in this area, is what we've seen, is what they do is they are nominated by the company to receive the tax benefit on behalf of the claimant company. They then take their fee out of that amount they've had from HMRC before paying it to their client. And HMRC have never liked this, but up till now, they haven't done anything to stop that. So from now, essentially, that's going to go away. It's not going to be allowed. So R&D benefit, R&D credits will have to be paid to the claimant company and not any third party. And this was done with immediate effect, that no new assignments could be made after budget day last week, so 22nd of November. And from the 1st of April, essentially current nominations assignments for anything, for claims payable, for claims made on or after the 1st of April 2024, they will have to be paid to the company. So I think obviously it's quite devastating for anyone that's done that before as a way, sole providers of R&D tax relief advice aren't going to be very happy. It's been a way for them to guarantee getting their fee without having to chase, because when you're a sole trader, it's difficult if you don't have a team behind you. But I think overall, it again it's a way to weed out those people that have been not necessarily behaving very well in this space. It pushes people who can't afford teams to chase their invoices out of the market.
Yeah, and I mean, if you roll back, I'm probably going back 2 or 3 years now. I remember in one of the RDCF meetings, there's been quite a bit of conversation about contingent fees, and there's been discomfort from HMRC around the contingent fee model that obviously pervades in the sector. Mm-hmm. And this feels to me like a measure to try and curtail that to a certain extent, because clearly, this mechanism has come about as a way of recovering fees on that contingent basis. So it feels like a measure to control that as well.
Because it's something HMRC stopped talking to advisors as much a lot of years ago now, more than 5 years ago. And they stopped giving updates to advisors as readily as they used to. So it has been more and more difficult to know when your client's claim's been paid out and exactly how much was paid out to them. And therefore, if you're on a contingent fee basis, you need that information to be able to invoice them. So that's where this has kind of crept in from. If you're charging contingent fees, this is the only way to absolutely guarantee that you will get your cut before the client spends it all, before the client has it clawed back by HMRC, whatever it is. So as you say, it is a step towards stopping that because HMRC don't like it. It could mean there's more of a move toward, as we've seen already, we've seen a move towards fixed fees and upfront fees, and this will probably push more people in that direction of fixed and or upfront fees.
Yeah. And to be fair, that's been a trend we've seen over the last couple of years anyway, more and more, certainly in our customer base. So I guess that's probably representative of the...
And with the merged scheme, again, because the amount that will be received in benefit is far easier to calculate out front, that should also mean that fixed fees again become more feasible, because you know exactly how much your client is going to get. You can peg your fee at an appropriate level for their claim. So I think that's really a benefit to both claimants and ethical advisors.
Yeah. Before we move on from last week's statement, what's your kind of view on the future? I mean, we've said that HMRC have said that they've stopped tinkering, so that our governments have said they've stopped tinkering. And any views on how things might change in terms of HMRC and the way they operate? Any patterns that we see there?
I feel like I had an answer for this and I forgot what it was.
Well, I mean, I suppose that's that statement that they came out with about certain sectors that they're after. You might see that change over time, that certain sectors kind of bubble to the top, things that they're interested in looking
I think
at.
what I'm hoping, and I think everything we've seen so far does seem to point that way, is to go back to where the sector was in relation to HMRC, say 5 years ago, when it was still it was a productive and collaborative relationship between people claiming R&D tax relief, their advisors, and HMRC. And obviously there was a huge change with a lot of people jumping on this and making ineligible claims. So I'm hoping that all of these measures will move those people out of the space. I'm a wee bit concerned about HMRC's commitment to using, and I can never remember this, but there is a little bit of legislation that lets them just correct tax claims if something is obviously an error, and they're using that to remove R&D claims for where it's the sector is not right and that kind of thing. But hopefully, as they can get the level of claims under control, the level of inquiries under control, the level of fraud and error under control, we can go back to a more discursive relationship where people can learn from inquiries and get better.
Yeah, yeah. I think when you kind of reflect on this 12-month period or 18-month period with all of this change hitting, and kind of get under the skin of HMRC a little bit and understand why they've done it. You know, the level of fraud, and we know that there's a bunch of people who've gone to jail for serious fraud associated with the scheme. We know that, you know, up until the implementation of the AIF, there was still a large number of claims going through with no justification, just numbers in CC 600. So, you know, when you kind of take the scale of the problem that HMRC have been dealing with, these changes are, you know, they're fair enough. We might have issues with behaviour on the ground and the kind of day-to-day interaction with them, but I think that the drivers for doing all this are pretty clear. And I guess, you know, we have to welcome them, don't we? Well, we have no choice than to embrace all of this going forward and build new processes to adapt to them.
Absolutely.
Cool. So we mentioned earlier on, there's a mixed audience on the call today. We've got some customers of WhisperClaims on there, some others who are not. So for those of you who are not familiar with us and would like to know more about the business, we do run regular showcase sessions. We've got one coming up on December the 5th, and Suze will share a link to that. So if you're interested in just finding out more about our business and more about our technology, that's a great place for you to do that. Anyone who's on the call who is interested in maybe going a step further than that, I'm just going to get a quick poll up here. I can work the software. Just bear with me a second. Anyone who's interested in going a step further and booking a one-to-one demo session with us, you can do that through this poll, which unfortunately, Suze, is not working. Have you got? Could we use a link direct to the demo booking page instead?
Let me just see if I can give you.
It's not that I've not got access. Actually, it's just not working when I click on the link. So if you've got a link handy, Suze, for the demo page on the website, you post that up. Anyone who's interested in a one-to-one session with us, use that link, and we'll get you booked in, and we can walk you through our technology. So that's us done. Q&A. Have you had any questions coming through, Sue?
We've got a couple actually. So first one is quite a technical question here from Trevor. Thanks, Trevor. Is there still a requirement to add expenditure from other group companies when working out total expenditure under the intensive scheme? And how does this deal with expenditure recharged between group companies?
That's one of those that I don't know. I know that previously the R&D intensive scheme did make you take kind of expenditure as a group rather than just as an individual company, so that you weren't kind of moving all the expenditure of one company in the group and letting them do the claim, that kind of thing. Those rules do seem to be carrying on in the new stuff. I don't know enough about expenditure recharge from group companies to comment on that just now, I'm afraid.
Thanks, Jen.
That sort of thing will need to wait until after the legislation's been published on it, Jen. There's quite a bit of detail that's missing just now.
Yeah.
Thanks both. I've got another question. Thanks, Jaquetta. For accounting periods split over April 2024, will everything need to be time apportioned and calculated separately, i.e. SME scheme spend for January to March 24, merge scheme April to December 2024?
No, happily. So what will happen is if you have a claim period that starts before the 1st of April, that will be entirely claimed under the current schemes, the current regime. And it's only for claims that start on or after the 1st. So there won't be any straddling claim periods like we've seen. Obviously, with this year, you've got one enhancement rate for pre-April expenditure and one for post-April. We won't have that. So there's no need to worry about periods that straddle. Questions we haven't had answered yet are, for example, if you've got an extended claim period with a second sort of corporation tax period within that extended period starts after April, what scheme do you claim under. We're hoping to get some clarity at the RDCF on that. But in general, if the claim period straddles April, no, you will continue to claim under the current rules. And if it starts on or after the 1st of April, you'll claim under the new rules. So happily for this change, there's no need to do that kind of apportioning across the 2 periods.
Happy days. We don't have any other questions just now, so just big shout out if anybody does have any that you'd like Jen and Mike to answer live, just drop us a message in the Q&A box. Are there any rounding up messages that you have for anyone, Jen or Mike, just while we wait for see if there's any more questions to come through?
I suppose while we wait for questions, we could mention what we're going to be doing for our customers and anyone that's interested in the software. Obviously, because this is part of my job, I'm quite relieved that the changes are in some ways quite simple. It's not going to be like the changes for August again, but we will be working out what questions still need to be asked and how to separate our clients into R&D intensive SMEs versus everyone else. Obviously, we'll be changing all our calculations to allow for the fact that the grants don't matter anymore, so we don't even need to ask you about them. We'll be changing things around the subcontracting because that's a big difference. And obviously, we'll be changing all our calculations so that it's one number comes out the end, not one for SME and one for RDEC. But in general, from a software point of view, it's actually a nice little simplification. From a product's point of view, of making the product still elegant and easy to use, there's a wee bit more complexity for us.
And we'll also be dealing with that kind of layering effect that we mentioned earlier on. So the fact that you'd be claiming under the current scheme versus the new scheme and how to handle that timescale wise, that will all be dealt with as well.
Yeah, I mean, our devs are going to be really happy in 2 years when we can clear out all the code that deals with the current regime. But yeah, for the next 2 years, we'll be maintaining in parallel both the new rules and the system that deals with the old rules.
Right. Well, you're all very quiet today. Hopefully that means that Jen and Mike did a really good job at covering everything and you don't have any
unless
questions.
Everybody's just stunned into silence and soaking all that news in.
If anybody does have any questions that they'd like to ask us post event, you can see that we've got a an email address, sorry, there. And if anybody would like to engage with us to have a deeper chat, you've got the links in the chat box to get in touch directly or to book a demo through the website. Hopefully we'll see a few of you at the event on the 5th of December as our webinar event for our app showcase. But for now, I think we'll draw everything to a close. Thank you all very much for joining us today, and we hope to speak to some, if not all of you, at some point in the near future. Thanks, Jen and Mike.
Cheers all.
Thanks.
Bye.